What's up, everybody? What's going on, folks? Welcome to the True Trading Group YouTube channel. Guys, my name is Michael Edward Parinati. I go by Michael Edward, and I began my career working at a hedge fund in New York City, to the Alpha Fund, to be exact. My first job out of college. While there, I had to go through an educational training program before the fund let me touch even $1 of their money. But then 2008 happened, and that was the Great Recession. The stock market crashed, but also the same year that I received one of the firm's Trader of the Year awards. And now I'm the co-founder and head trader of True Trading Group, along with my team of 9 other professional trading mods and an over 30-person staff. We've helped thousands of members from all over the world reach their goals. We actually have members in 115 different countries. Speaking of different countries, I'm here on vacation enjoying some much-needed R&R, but that doesn't stop me from being in the action, from being in the trenches, because the markets had a little bit of a sell-off day today, a little uneasiness in the markets, and I want to talk about why. Why did the markets move to the downside? There's a lot of things that happened here today. You've got a lot of stuff coming up in the month of September. In case you didn't know, September, weakest month of the entire year. You go back historically over the last 100 years, and you look at the market's performance month by month each year. September is the worst performing month of the entire year. I mean, hell, just the last 3 years, the markets have basically crashed in the month of September. Last year was the big crash of 2022. That occurred in the month of September. Do we get more of that this year? Well, here we sit, and the markets are down just around 1%, as we are so far trading lower in the month of September. So is September going to be, again, a red month for this market, or is the market going to take you by surprise? Let's talk about what happened in the markets today. Why were the markets down? You have a lot of stuff that took place today, guys. The Beige Book came out. The Beige Book, if you don't know what that is, that's basically the economic situation, rather, for all the different Fed districts around the country. They all gather their data, and they tell you how the economy is doing in different areas of the country. Now, over the last couple of weeks, the market has been very fixated on the consumer, very worried about, is the consumer going to last, or is the consumer going to really start to scale back as student loan payments have kicked back up? That's an extra $356 a month that the consumer now has to pay. Well, you've got higher groceries, inflation, obviously, right? So that's $356 of what was discretionary spending that is no more going into September, October, November, and then into, obviously, the holiday season. So this is something that the market's a little on edge about. So the Beige Book came out today, and the Beige Book said some districts saw consumers exhaust their savings and turn to debt. Now, that's very important because Goldman Sachs anticipates that by October, the consumer will have exhausted all of this COVID savings. Does that change their spending habits? I think it's going to. You also saw some data today that says that you had lower or less visitors to the mall in the month of August than you saw in June and July. So a significant drop in mall traffic in the month of August compared to June and July. Well, that coincides perfectly with exhausting savings and payments. So we really need to pay attention to the consumer going through these next couple of months. I believe that all of this data is going to create tremendous volatility for us as traders. You don't have to be worried of, the stock market's going down. No, be happy when the stock markets go down, because for a couple of different reasons. Very selfishly. One, well, when markets go down, things are more volatile. Stocks go down faster, then they go up. They go down in faster periods and shorter periods. Those bigger movements create bigger percentage opportunities for us as traders, whether you're day trading or you're swing trading. It's exactly the environment that we look for. I've been doing this for over 17 years. And I'll tell you, this is by far the most opportunistic environment that I've ever seen in my entire career. And I've been through a lot. I've been through a lot of bull markets. I've been through a lot of bear markets. Don't forget, I received the Trader of the Year award in 2008, which was the biggest bear market that any of you have ever seen. Okay, so stocks going to the downside is not anything really new to me or the members of True Trading Group. So I'm not sharing this with you to be some type of doomsday fearmonger, because I'm not that. I think worst case scenario is there's a mild recession that does not see some massive spike in unemployment, but is actually needed to help bring inflation back to the Fed's target of 2%. As a matter of fact, Deutsche Bank agrees with me. Deutsche Bank came out today with a note that says their most likely scenario is a mild recession. That's what Deutsche Bank said today. So you've got the Beige Book comes out today, and the Beige Book gives you that information. The Beige Book also told you that job growth was subdued throughout the entire U.S. But is that really a bad thing? The markets rallied last week on the back of weaker than expected jobs data, because you need weaker than expected jobs data in order for inflation to come down, in order for the Federal Reserve to stop raising interest rates. I'll tell you right now, I think the Fed's done raising rates. I think the only September is if the CPI number that we get next week is drastically higher than expectations. I don't expect it to be drastically higher than expectations. But if it is, then maybe that makes the Fed raise rates in September. But if not, if it's in line with expectations or under, there's going to be no hike in September. That's what I believe, and that's what I think. So now the markets can focus on, okay, well, now that we're done with rate hikes, what's the status of the consumer? Because up to this point, bad data has been good in the sense that weaker jobs data would stop raising rates, which push stock prices higher. But now that once you get past, okay, the Fed is done, then all of a sudden bad data will then become bad data again, because the market's going to want to see that the consumer is holding steady, the consumer is holding stable, that there's not any signs of a recession, because so far the data does not show recession at all. The data is what the data is. I'm surprised by it. If you asked me a year ago, did I think that we were going to be at 2% GDP? By no. Sure enough, here we are. And GDP is around 2%. The unemployment rate's at 3.8%, which is still 40, 50-year lows. The average unemployment rate over the last 20 years is actually over 5%. I don't know if many of you knew that or not. So the fact that we're at 3.8, still historically a very low number, but we got to pay attention to that. You've got to pay attention to the jobs numbers over the next 1 to 2 months, because the market really wants to see, once you're done raising rates, is the consumer going to stand steady? Is the consumer going to hang together? So all of this kind of combined today to cause some nervousness and some weakness in the markets, right? You also have this looming government shutdown that's coming up. Remember, we had all that government back and forth between Democrats and Republicans to move the budget, or to raise the debt ceiling rather. Well, all they did was postpone it. Well, you're going to be coming up pretty soon on another possible government shutdown. So that added, you had some comments today from Chuck Schumer that added to kind of some nerve. Top it all off, China's government just banned the use of iPhones for government officials in China. And that, my friends, sent Apple plummeting to the downside for fears of there being more restrictions between U.S. and China. Have been going kind of back and forth over these last couple of weeks. Kind of, oh, semiconductor chips this, trade exports that. Well, now here comes China with the iPhone. That's not good for Apple. Gets caught in the crosshairs of some geopolitical tensions between the U.S. and China. It's not going to be good for a company like Apple. It also wouldn't be good for a company like Tesla. Tesla relies pretty heavily on China. So does Apple. So you got to pay attention to what's going on there. But all of those topics today added to the overall weakness of the markets, and that sent us moving to the downside. But even with all of that being said, the markets held some very important support levels today. Let's take to the charts. Let's talk about it. On Monday evening, because of the holiday, I told you very specifically that there's a very important support level that you need to keep your eyes on with regard to the SPY. And I would expect there to be a bounce off that level. And that level got tested today, folks. And it was at 445, 444. And there it is right there on my charts. You can see we dropped right into the 50-day moving average. That's that dark blue line you see on my screen. We tested that level. You also see previous resistance. Then you can see previous support, right? As we go back further, look at this again, previous resistance. Let's look back even further, previous resistance. So you guys see that level was a major level for the markets. If that level breaks, you're talking about at least a 10-point move to the downside on the SPY. Today, we got in, we tested it, and we held. It's a successful test and hold of that area. Look for technical bounces off of that, unless you get more jobs data that's going to come out tomorrow. You've got jobless claims data, initial and continuing. Watch that number at 8:30 a.m. Eastern. If it is significantly higher than expectations, that could crack that level. But if jobless claims come in line or under expectations, I 100% expect a technical bounce off of that level. So pay close attention to 8:30 a.m. Eastern. when that jobless claims data comes out, I think that's going to set the tone for tomorrow's price action. Take a look at Apple today. Red candle in Apple. I mean, have you seen a bigger red candle in Apple in the whole year? The answer is no. You had the one gap down on earnings, but after that, aside from the earnings gap down, that is the largest red candle from high to low that Apple has had all year. I told you get ready for volatility in the month of September. Apple's one of the lowest volatility stocks out there. It's the bellwether, it's the juggernaut, and that stock gave you tremendous volatility today. It's a sign of what's to come. It is a sign of what's to come this month of September. I've been warning you for the last 2 weeks, get ready. CPI data next week, the Fed meeting the week after that, historically the weakest month of the entire year. This is the month, if you have been sitting on the sidelines, if you are licking your wounds because of what's going on with AMC and all that dilution, it's time that you pulled your pants up, put your mouthpiece on, strapped on your helmet, and got ready to make some damn money this month. Guys, we've got a 7-day trial that you can join with us. We've been absolutely on fire. Several triple-digit gains in the month of August. We've had a couple already. It's only a week into September, only a couple of trading days rather, and we're already continuing the hot streak that we've been on since really it's been going on all summer, honestly, but August was a little ridiculous. We had a bunch of triple-digit gains in August. Guys, join our trial. Do yourself a favor. It is a 7-day trial. It's a one-time payment. It's only $3. I charge $3 just to make sure that you're actually a real person. We maintain a very high quality chat room, 10,000 members from over 115 different countries. All you need to do is pay $3 one time to make sure that you're a real person. Okay. There's no automatic renewal. There's no reoccurring payment. There's no, additional fee. There's no automatic upgrade. If you don't do anything after your 7 days are up, your trial just expires. And it's 7 trading days. So the weekend doesn't count against your 7 days. It's 7 trading days. Oh, jeez. Come on, get out of here. It's 7 trading days. Okay? Go to TTGTHREE.com. That's TTG3 spelled out.com. Again, TTGTHREE.com. Enter your name, email, phone number. Click yes, I want this. Fill out the application. Pay $3. It's a one-time payment. I know you all have $3. You spend $3 more at Starbucks. Let's be real. Starbucks doesn't help make you money. Join myself, 10,000 members from 115 countries with 9 professional trading moderators that can guide you through each and every single trading day, give you market commentary, call out all of our trades in real time, and be part of the fastest growing and highest rated premium online educational platform that is True Trading Group. Folks, we are 5-star rated on Trustpilot with over 2,300 reviews. We have a 78% retention rate amongst our members and a nearly 2.39% refund rate. I assure you this trial will be the best damn $3 you've ever spent in your life, and there has never been a better time for it because September is the month of volatility. It's CPI data. It's Fed meeting. The time is now. It's not tomorrow. It's not next week. It's not next month. It certainly hell isn't next year. The opportunity is right now. Go to TTGTHREE.com, enter your name, email, phone number, click yes, I want this, fill out the application, pay the $3, and get your butts on in chat. Jobless claims tomorrow at 8:30 p.m. Eastern. It will set the tone for this market. Continue to watch any piece of data over the next couple of weeks that involve the consumer. That's where the market's attention is going to be. Then you've got on next Wednesday, CPI data. That's going to be one hell of a ride. So get your butts on in chat. Join that trial. Again, guys, it's $3. It's a one-time payment. There's no automatic renewal. There's no reoccurring payment. There's no automatic upgrade. It's just $3. That's it. Plain and simple. TTGTHREE.com. Get your butts in chat. Subscribe to the channel. Smash that like button. I'll see you guys all in chat. I got palm trees all on my face. I'll see you guys later. Enjoy. I'll see you all in chat. Take care, guys.